Hello, everyone, and thank you for joining us today for our Chartered Insurance Institute webcast with Flaxman Partners. I'm Catherine Kennett, Policy and Public Affairs Manager at the Chartered Insurance Institute, and I would like to welcome you to our session, Making Disclosure in a Data-Driven System. The satisfactory operation of a contract of insurance requires a meeting of minds between proposer and insurer. Although today's data-driven process with its automation of underwriting decisions can prove to be very efficient, does the process help achieve a meeting of minds, or does it get in the way? We have with us online today Roger Flaxman, Chair and Principal Consultant, and Michael Wilson, Director at Flaxman's Partners, who will delve into this topic in finer detail for you. There will be time for questions at the end of the presentation, so please feel free to use the question box you can see on your screen, and we will work through these once the webcast is complete. So without further ado, I'm going to hand you over to Flaxman's.
Good morning and welcome again. This morning we're going to talk about the obligation that the proposer for insurance has to make a fair presentation of the risk in modern technology. The obligation to make that fair presentation is unquestionable because it's made very clear in the Insurance Act that a fair presentation of the risk is one which makes the disclosure in a manner which would be reasonably clear and accessible to a prudent insurer, in which every material representation as to a matter of fact is substantially correct, and every material representation or belief is made in good faith. Now, the question is, what would an ordinary member of the public understand by that? It's acknowledged, and you may or may not know this, but it is acknowledged practice in a court of law, it's a place where we spend some of our time, that a witness cannot presume to know what was in the mind of another person. So you can't just say, oh, I think he was thinking of that when he did it, because the court would say, well, how would you know? How do you know what's in somebody else's mind? So how does that work in practice when we are required, the proposer is required to make a presentation which would influence or make clear to a prudent underwriter? In fact, how many people would know what a prudent underwriter is? How many people would know what an underwriter is? So isn't it interesting that we've got a law which requires a proposer for insurance to make a disclosure which in fact is of every material circumstance which the insured knows or ought to know, or failing that, a disclosure which gives the insurer sufficient information to put them on notice that it needs to make further inquiries. If we start from the presumption that no one can know what somebody else's mind is about. It seems inconsistent. Now, that inconsistency is one thing which we can deal with when we're dealing with real dispute cases with the law. We can deal with it. But when you look at it in the context of what's happening in our industry now, which is a large part of the transactional process of insurance is being run by algorithmic technology, and there's nobody there to ask questions or to answer them or to redirect the mind. Are we doing it well enough to satisfy the objectives of the requirement in the Act? Now, the reason we're bringing this up is because Mike and I, over the last couple of years, are having a complete flurry of cases which are right in the centre of this issue. In other words, the insurers or their representatives in the claim are saying, you haven't told us something which we think was a material fact, and therefore you're in breach of the Act. Now, what we often find is that the question was never asked, and more importantly, the mind of the proposer was not in any way directed to what might be in the mind of a prudent underwriter. In other words, if an underwriter says, this is what I want to know about your risk, how does anybody know what that is unless they're directed? Now, that direction used to come from proposal forms. In our experience, the absence of proposal forms, and particularly the transition towards statements of fact, is having a material and probably detrimental effect on the protections of the consumer or of the proposer, consumer or otherwise, because a proposal form was something you actively had to read, think about, and give an answer to. A statement of fact is something which most people won't read because there's no necessity to do it. They'll glance over it and think that looks about right, but not understand where the little sort of trips and traps are, because sometimes there are questions in the statement of fact, which is ironic, and sometimes they are statements. And there's a classic statement which everyone will have come across. My home is not within 200 meters of the watercourse. And we've heard so many people say, well, it can't be because they wouldn't tell me it is if it wasn't. So this is one of the problems that we're dealing with. And what we're going to discuss this morning is what are the effects of this and what possibly, if anything, could be done about it to help who? Well, help the customer, but above all, to help us as an industry re-cement the reputation of our industry in the minds of the insuring public. Okay, Mike, over to you.
Thank you for that introduction, Roger. As usual, we just need to read through the learning objectives. So today it's to review and understand the customer's choice of routes to the insurance market, to consider which sales are advised and which are unadvised, to address the difficulty of automated underwriting decisions in circumstances where the proposer has difficulty providing additional information, to understand the importance of a meeting of minds at inception or renewal, and to consider the role of the human element in the use of data. So let's first of all look at the different routes to insurance. Roger's referred to the fact that there used to be proposal forms. That was quite a simple age, and I'm just going to revise here the different current routes that a policyholder has in the process of applying for insurance. So quite often people will start off on the internet looking at an aggregator or a comparison site. They probably do this for convenience and because they think they'll get a cheaper premium. So they will start off obtaining an indication of cost. And then once they've seen an indication of cost, there will be an option to proceed onto another independent site. So they will click through to the next site, which raises the question, does the next site offer an advised sale, or is it an execution only or non-advised? From our experience, it's not always that clear. People seem to understand what the comparison site is there for. They then click through to another site, which might be, they don't really know who it is, and they're not too sure whether they're to expect advice at that point or not. Instead of going through an aggregator site, the proposer might go direct to an insurer. Are they to expect advice from the insurer? Or is the insurer simply saying, here's our policy, take it or leave it? Again, we're not entirely sure that is always clear. The proposer can go to a broker. And of course, the broker himself quite often will have the use of an online platform. does the broker have access to the whole market, or a restricted market? Or is it a non-advised service offering just one insurer? Does the broker have opportunities on his trading platform to add comment and to amplify the standard question and answer process? And we've touched on this issue in previous webinars on the very vexed and difficult subject of drop-down boxes. The number of times Roger and I hear from brokers that they're frustrated by these drop-down boxes, which never quite seem to quite fit the bill. And then sometimes it's very, very difficult to add additional comment. And then, of course, also through the broker who's using an online trading platform, what exactly are the refer arrangements? Is it easy for the broker to go back to the underwriter and refer a particular case that doesn't seem to quite fit the usual parameters? So technology has changed the simple process, and in the fight to acquire a customer's business, there's an increasingly lengthening chain of intermediaries between proposer and insurer, all of whom are irrelevant to the customer's eventual contract, although it's highly influential in the integrity, security, and reliability of the contract eventually made. In other words, the policy. We see many cases where there are 4 or 5 different entities in the chain between the proposer and the ultimate underwriter, all of which presents an extremely confusing picture to the policyholder, who has no idea who the intermediaries are, how or what they get paid, and we're finding this is throwing up all sorts of problems. If I'm at a social function, I've got something of a party trick, which I think is beginning to wear a bit thin. But sometimes the subject of insurance crops up, which is perhaps a reflection of the poor grade of the social events that I attend. But I suppose when people know that I'm involved in insurance disputes, the subject does come up. And I quite often say to anybody who will listen, I will give you some advice which I know you're going to ignore. So that gets them interested. I say, when you buy your insurance as an individual, don't do it online. Go to a broker, preferably somebody you can go and visit, sit down, discuss your needs, and negotiate a price. And it's particularly when dealing with individuals, I'm right, because in most cases my advice is ignored. But for me, it's the only way to get the sort of clarity that you need. On one of these webinars, Roger and I, on one of the feedback forms, it said, Roger and Michael are refreshingly old-fashioned. And we took that as a compliment, but we do tend to hark back to ways that business used to be done, because technology has a lot of positive features, but what we're trying to highlight is that quite often it detracts from the clarity that the insured is entitled to expect. So Roger, would you like to introduce the subject of a meeting of minds, which is so central to the forming of a satisfactory policy of insurance?
Yes. Well, I think probably I've said some of it in the introduction. The point is that the experience that we see, and this is really what we're basing our webinars on. We're not pontificating on, theory. Where actually virtually everything we talk about is because we've seen it in practice. And in practice, what is happening is insurers are being advised either by lawyers or by loss adjusters that very often there is something that is discovered at the time of a claim that wasn't disclosed at the time of making the proposal. And the policyholder, and we act for policyholders, will say, well, nobody asked me that, and nobody asked me anything really. I had to sort of think about what I'm going to say to make an underwriter understand. And I'm going to give you a quick example now, because they're much better than the theory. This was a case of a light engineering company that specialized in certain types of metals. And what they do is to separate different types of metals from other types of metals, and then I think what they do is they separate them and then they trade them, because there's an increasing demand, as you may or may not know, for precious metals and such like. And this is what this company does. Now, they've been doing it for well over 100 years, and they have made disclosures about their insurance largely through an online process, although I have to say with the help of a broker, so it wasn't entirely unadvised. But they disclosed what they thought was everything that would influence a prudent underwriter. And it turns out that they had a fire and something happened which disclosed the fact that they were using a particular process that they hadn't listed in their proposal in their presentation. Now, in this presentation, they listed 14 different types of process that they ordinarily do, and one was missing. And the one that was missing was the most recent, been going on for about 3 or 4 years, and it was less than 0.5% of their work. It was just a small process, and I'm not going to say what it was, but confidentiality reasons. But it was a process that, in our opinion, a prudent underwriter would probably never have thought of, because I don't think anybody not in the job would ever think of it. But when it's pointed out to you, you'd say, oh, yeah, that's interesting. Now, they said, well, it's not only interesting, but we didn't know about it. It wasn't causative of the loss. But they relied upon the fact that it wasn't disclosed, and it ought to have been disclosed. And this is a big fight. This is a big, big fight. Now, the question is, what could have made the difference if there had been a better meeting of minds between the insured and the insurer? And how would that meeting of minds better have been done? In the event that there was some kind of descriptive process required, that ought really to have been said in the proposal form. Please list the processes, all of the processes that you use in the course of your ordinary business. That would have been a fair question, but there was nothing at all which directs the mind of the customer. Now, you can look at this in commercial terms, you can look at it in terms of directors and officers. One of the most common failures in D&O insurance is to fail to disclose the history of the directors and the officers with regard to county court judgments, bankruptcies, insolvencies, going back years and years and years. And very often people are looking for these things in the event of a claim to see if there's something they can discover. But the questions concerning these things are certainly not clear. They're not clear in proposal forms. They're not clear in statements of fact, and they certainly aren't clear on the internet. So what we're looking to do really is to recognise the fact that it's perfectly reasonable, perfectly fair that everybody should be available. They should be capable of making a fair presentation, but they do need some kind of direction. So, Mike, would you like to take it from there?
Well, yes. We just need to have a dialogue as to whether or not the current arrangements are fair to the customer. Now, you and I, Roger, when we're doing advocacy work, invariably represent the policyholder. And so we tend to look at things mainly from the policyholder's point of view. And I can well understand CII members on the webinar today who work for insurers saying, well, you would take that line, wouldn't you? These days, it's as if the applicant for insurance, the proposer, doesn't really have much personal responsibility at all. You're trying to put the onus back on the insurer to do the leading. Now, is that what we're saying? And if we are saying that, to what extent should the proposer ensure that he's engaging properly with the process rather than just treating this as a grudge purchase and trying to get the process through as quickly as possible? So this slide says what can be done to achieve a greater clarity as to what an underwriter wants to know and what exactly is required in the making of a contract.
Yeah.
But we could move on from that. We don't need to dwell on that because I think we'll leave that as an open question. But the difference between buying direct and execution only, or non-advised. First of all, the proposer is not always sure whether or not he's entitled to receive advice, but it's useful to look at the ICOB's rules, which are available on the FCA website, and in particular ICOB's 5. And this is how the customer can be guided as to exactly what should be disclosed. And it's worth just revising what ICOB's says. So I'm just going to read them out. So ways of ensuring that the customer knows what he must disclose include, and there are 4 points. 1 point, explaining to a commercial customer the duty to disclose all circumstances material to a policy, what needs to be disclosed, and the consequences of any failure to make such a disclosure. So just to go back to there, it says explaining to a commercial customer that duty. Point 2, ensuring that the commercial customer is asked clear questions about any matter material to the insurance undertaking. So there has to be clarity. Point 3, explaining, it's that word explaining again, explaining to the customer the responsibility of consumers, so now moving on to consumer insureds, the responsibility of consumers to take reasonable care not to make misrepresentation, and to explain the possible consequences if a consumer is careless in answering the insurer's questions, or if a consumer recklessly or deliberately makes a misrepresentation. This is really at the heart of most of the consumer disputes that Roger and I see. And point 4 is asking the customer clear and specific questions about the information relevant to the policy being arranged or varied. So a lot of this is down to the need for clarity, and sometimes that clarity is simply not there. But to pick up on the responsibility of the policyholder, rather than putting all responsibility on the insurance company or the broker, is that so often we see cases where the consumer really has not applied themselves at all to the process. And I think this happens particularly with online processes. I think in a previous webinar, we related a case where we listened to a telephone call. The proposer had phoned the insurer for clarification, and we could hear the television on in the background, various chit chat going on in the room, and it was pretty obvious to us that the insured hadn't really applied himself to the seriousness of the process. So we try not to be too one-sided on this, but the fact remains it's up to brokers and insurers alike to ensure that there's a proper explanation about the duties concerned. Now, if we're concerned about whether or not electronic methods of doing business are actually working, we have to then consider this next point, which is one of human judgment. despite the advancements in artificial intelligence and trading platforms and sophisticated computer programs, you can't get away from the fact that at some point there's a requirement for human judgment. Do you want to address this, Roger?
Well, I think it really goes on to what I've been saying already, is that if you don't direct a human mind to the subject that you want them to discuss, you're not going to have a very interesting discussion. And I think the issue is that human judgment is being gradually squeezed out of our industry with the predictions that AI is going to take it over. I know there's lots of discussions about how it will do it and when it will do it. But one of the things that you may have noticed when Mike read out the ICOBs was that not only have you got to make the questions clear, but you've got to tell the party what are the consequences of not making it clear, of not doing it properly. And that question of consequences goes to the heart of what we're talking about. Because if there isn't a meeting of the minds, and if there isn't some human judgment in the process, then the consequences for the insured can be catastrophic. And we're looking at a case the other day where somebody is carrying out a large amount of work on a reasonable sized private dwelling house. And the amount of work that was being spent on it was somewhere just short of $500,000. And they had a fire. And the insurers have discovered that they didn't know the work was being done on the house. And the insured said, well, I had no reason to tell them. Now, of course, it's in the policy. But we all know, don't we, that with the policies that we get nowadays, these things that are sort of tucked away, you know, is there a duty to read the policy? Of course there is. But do they in practice? And are they going to notice something like that? And are they going to remember it? Even in my case, my insurance, I get a policy sent once every 4 or 5 years because they just say, see last year's. And so my policy document, I happen to know, is about 4 years old. I don't get one every year. Can I remember what I read 4 years ago? Am I going to take it out and read it? The answer is when I need it. And that's the reality of insurance. Now, the question of the human judgment is this, that if we don't include some kind of relationship in the transaction, we are going to gradually exclude any kind of basic understanding of a policyholder as what is in the mind of a prudent insurer. The more we do quickly with technology, the less learning, the less background experience people are going to have, and the wider this gap is going to be. So the consequences for this family that didn't notify the insurer that they were having the work done is that they haven't got any insurance. And it's a big loss, more than $500,000. Is that fair?
Roger, can I just add that? Yeah. Can I just add that this requirement for a homeowner to notify their insurers of building works is one of the biggest secrets in the industry.
It is, yeah.
It's not broadcast. It's not explained. It is there. It is there in the policy. It's rarely brought to the attention of the policyholder, and it's causing a lot of trouble. And
increasingly,
I think this is where the human element needs to come in the way of identifying that your average policyholder doesn't appreciate the need to notify this sort of thing. They would know that if they changed address, they would have to notify that.
Exactly.
If they change their car, they have to tell that. But these are obvious things, but the less obvious things are not highlighted.
But they only know those things because over the years people have become used to doing it. It's a learning curve that has been. The other aspect to this business of notifying building works and things like that is that some insurers will say, well, even if you told us, we wouldn't have insured it because it's outside our scheme limits. That's the common expression we hear. Now, a policyholder would no idea what scheme limits are, let alone that you have any, and that their insurance might be outside them. So, and technology doesn't help us convey this. Although, do you know, one of the ironies of the situation is here we are this morning giving a remote webinar through some fantastic technology, and thank God it's there. We've got a plethora of facilities through websites, and yet all of the information which we could so easily make available to ordinary customers is not on the website. You just can't find it. And it would be so easy for insurers or the ABI or somebody like that to say, well, let's take this basic stuff, this basic information of what's in the mind of a prudent underwriter on a house insurance or a shop insurance or a motor trade insurance, and put it out somewhere so somebody can read it if they want to. Because I can tell you this, that if you, again, going back to the dispute and the court process, if somebody discovers that information concerning a relevant thing is on the website, someone will say, Mr. James, did you know that website was there? Yes. Did you read it? No. Could you have read it? Yes. But you didn't read it. You chose not to read it. Bang. That's it. And the point is, if we make available information that is germane to prudent underwriters on different subjects, which would be really easy to do, it's much more difficult then for the customer to say, I didn't know, because you can point them to it and say, just read that, that'll give you a clue as to what we're looking for. And coming back to the other aspect, which Michael mentioned earlier about it in the concept of human judgment, we recently had a case where somebody described, Michael, what was it? It was a community hall, wasn't it?
Yes.
And they described it as something else, and it was the same thing but with a different name, and the insurers chucked the claim out because, oh, we don't have that listed on our drop-down boxes, so you tick the wrong box. And the insurer said, that's the only box that there was there to tick. Well, that's not our problem, that's yours. This is technology, and you can imagine the impact that makes.
Let's have a look at a couple of examples. Could you take us through this first one, Roger?
Yes, okay. Right, well, this one, this was a general store in a small town, and they required insurance for their business. And they were advised by the accountant to go to the internet and look for insurance on the internet. So they go through a multitude of websites, and what we know now, they came to the conclusion, well, they're all the same, they're just a different price. Now, a choice is made at a price that suits their budget. In other words, they find something there, and then they buy the insurance, going through the next part of the process, describing themselves as a general store, groceries and food. Now, they get all the documentation. We established that they had a quick flick through it, but didn't read it all. But a month prior to the renewal of the insurance, they suffer a fire. It started in the basement, and it destroyed stock, the boiler, freezers, and all the main services. It also damaged the ceiling above it and the floor above that, so it was quite substantial. And the store had to close for obvious reasons. And during the process of the adjustment, the owner was put to some very severe questioning, apparently, very severe questioning on their bona fides and who they were and what they'd been doing and what they were trying to keep from underwriters. And it turned out that this resulted in a letter saying, on this occasion, insurers are unable to offer indemnity because the insured has failed to tell underwriters that it stocked highly flammable liquids, of which there was a store in the basement. Had the insurers known of its presence, they would have declined to accept the risk. Now, an investigation into the audit trail on the online application revealed that the customer had completed 3 separate sets of questions from drop-down boxes. This is in the process of the application, each being from a different intermediary. There was an aggregator, a broker, and an underwriting agent. Now, the business had been insured as a general store for groceries and food, And the insurers asserted that it should have been insured as a convenience store, the latter being a description that that insurer, associated with stocks of alcohol, general cleaning materials and fluids, and barbecue fuel, all of which is classed as highly flammable, and all of which fueled the fire in the basement caused by the electrical fault in the heaters used to keep the damp out of the stock. So the insurer said, we're not paying this claim because non-disclosure, and that you'd used the wrong business description. That is the essence of this particular claim. They used the wrong box. So our point is the boxes just aren't sophisticated enough. And I think one of the one of you maybe here today on a previous webinar suggested that there ought to be a kind of a text box that people can put their own comments in these systems. But the answer came back, oh, that would be too difficult and nobody reads it anyway. Which is an interesting comment. Michael, over to you.
Here's another example that we have a contractor who is starting up in business, goes online, ends up on a broker's site, discloses an estimated turnover of £75,000, and the policy was renewed for 5 or 6 years. Very easy process. The contractor was pleased that it wasn't paying too much. It was an attractive premium. But by the time the liability claim, after 6 years, his turnover had increased to 1.6 million. Very successful business. And the increased turnover had never been disclosed at any of the renewal dates. It had just been turned over, premium paid, nice, automatic, easy process. Rather predictably, the insurer declined to deal with the claim on the basis that there'd been a huge misrepresentation, that at none of the successive renewals had there been a proper revision of the turnover. The indication was that it had grown from 75,000 to 1.6 million quite gradually over the 5 or 6 years concerned. Which raised the question, because the contractor was left having to deal himself, either to deal with the third-party claim or to, if he couldn't afford to pay it, to go into liquidation. So it was a serious matter. So it raises the question, well, who should have advised, or who should have kept their eye on the ball? Is it the non-advised broker, because it turned out that it was a non-advised transaction? Should it have been the MGA in the middle, or should it have been the insurer? Now, in asking this question, I'd be the first to say that the insured must carry a reasonable amount of the responsibility for not having considered the information that he was providing.
Yeah.
So in that respect, I would have to conclude that the insured was the author of his own misfortune. But isn't it a pity that there was nobody in that chain who'd spotted a stagnant turnover figure? The insurer didn't say, wait a minute, this is the 3rd or the 4th or even the 5th year where the turnover has remained unchanged. Even though the broker was providing a non-advised sale, surely he would still have a responsibility to make sure that his client understood the contract. And part of understanding the contract is to make sure that you're declaring an accurate turnover.
Yeah. Yeah.
And we just flag this up because there's no alarm bell. There's no alarm bell at the broker, no alarm bell at the MGA, and no alarm bell at the insurer, which I just think is a pity that the policyholder wasn't protected, at least to the extent of somebody saying, isn't it time you reviewed your cover?
This goes back to the comment that I made just a moment ago, that we've been told that it will be too difficult and nobody reads it anyway. And that's exactly the point, that if you're going to collate this information, it is sometimes going to throw up, what we would otherwise regard to as a refer situation. And we see lots of them, Mike, don't we? Lots. I mean, this is not just an isolated case. This is becoming endemic in the process, that the information is captured, but it's not sufficiently well reviewed at the other end to say, does this make sense? The only time that is done is when the claim arises, and let's see if it makes sense in retrospect. And of course, you can always find something with hindsight that was a good idea to have asked at the time, but you didn't. And the Act gives or gives some, not all, it gives some a level of redress to an insurer who says you didn't tell us something. What the Act also says, which I think is a point that's been overlooked in many cases, although we regularly have to bring it up now, is that if the underwriter is put on inquiry by enough information to put a prudent underwriter on inquiry, then they do have an obligation to ask those questions, and sometimes that's not happening either. So, Mike,
well, Roger, you and I once did one of these webinars that was aimed particularly at brokers, and the subject matter was the hazard of renewal.
Yeah.
And I think we know that a diligent broker will review things like sums insured and turnover, the client's occupation. These things will be reviewed every year. But we do still come across cases, even where it's an advised process, where the review at renewal has been extremely lightweight. And so I think this is a timely reminder for those delegates who are working for brokers, just to make sure that you haven't got any cases which have become a little bit dormant and the renewal has become just a little bit too automated. Because
we did have a case last year,
in the event
Mike,
of this sort of thing happening in this example, then of course the broker could well be open to some criticism.
Yes, we had a case last year, which you may remember, the 13 years had gone by between the broker doing a proper demands and needs assessment and the next one. And in the meantime, that broker had been taken over 4 times. And every time it went to a new broker, there was no treating of the insured as a new client. So he didn't get a review for 13 years. And then he had a loss, which insurers said, oh, well, you're 13 years out of date, so you're not covered, which is why we saw it.
Right. So Roger, we're going to have some questions and answers shortly, but in the fact sheet that will be available, we have an opinion section, which we would encourage you to read. I don't know if you want to say anything at this point, Roger, or whether we should go straight over to the...
Well, I think what I would say is that we've put on our slide here, technology is causing the reputation of the industry to become compromised by impairing trust in the integrity of the insurer and its associated suppliers. Now, actually, on reflection, maybe we ought to have added a question mark to that, because it is in some places, it isn't everywhere. But overall, we wouldn't be giving this webinar on this subject if we didn't think it was a big enough problem to really take some trouble to think about. Because when customers are disadvantaged by what we see as, may we say, experts in the industry, we know what we're looking at. If we can see where the flaws are in the industry, it's not unreasonable for a client to be upset when they're the victim of it and they've got no redress. And what we're trying to do is to say, well, let's think about these things. And as we develop the technology, because it's not going away, we're not going back to the old-fashioned proposal forms in the way we used to know it. But let's see if we can build into the whole process some checks and balances and some referrals and things that give the honest, diligent and ordinary policyholder a fairer chance of winning when they're using technology to buy their cover. Some questions, perhaps.
Well, as usual, the chat is going amazingly, and there's quite a few comments and questions. So I'm just going to read out some of the comments that were made for some of the earlier points.
Yep.
One of which was saying the fact that you are being involved in more issues suggests that this is not a fair route to insurance cover, but the race to lower cost cover that is easier to obtain means the trade-off is working poorly for consumers. But consumers must accept their part in this. Insurance is complicated. It is a distress purchase, and it is not to be rushed. And it's been years building up a business, so a bit of time and effort is worthwhile. I thought that was quite a good quote. And also earlier as well, we don't seem to be touching on the remedies that are set out in the Insurance Act. Assuming the non-disclosure isn't reckless, then we have to ask what difference it would make, and the underwriter would have to demonstrate that, in the example given, they wouldn't have to write off risk as excuse me, sorry.
Catherine, perhaps I can interrupt you there, because I can see where the comment is taking us, and the person who wrote that comment is quite right. We haven't addressed that in this webinar, but in the event of a misrepresentation or non-disclosure, and as long as it's innocent, in other words, only careless rather than deliberate or reckless, then of course the insurer must then show from its underwriting criteria what it would have done had the information been revealed. And if they can show that they would have declined the risk, then they're probably entitled to void the policy. Otherwise, it might be an increased premium, in which case the claim is likely to be settled proportionately. We have done a previous webinar on the Insurance Act, and I think particularly with regard to whether or not in the event of a non-disclosure, if an insurer is entitled to settle a claim proportionately, and if there's a dispute about underinsurance, there is a bit of a rumbling issue at the moment as to whether or not claims should be settled subject to average, or whether it should be subject to the proportion of premium that should have been paid. And the two remedies do not necessarily give the same result. So maybe next year, Roger, we need to have another look at the Insurance Act, revisit the webinar we did, it must be 12 or 18 months ago, and bring it up to date, bearing in mind the sorts of disputes that we're currently seeing.
I think, yes, I agree with that. I think we should. I think the point is that comment was a good comment, absolutely taken on board. But, you know, we do have the old adage, prevention is better than cure. And whilst there might be some remedies when these things go wrong, what we're saying is that actually they don't need to go wrong if you actually better focus the question process, the disclosure process, and just help the customer through it. And go back to the meeting of minds. An underwriter wants business. He wants to do it. He wants to say yes to you. All he needs to know is he's saying yes to the right person for the right reasons at the right time. And it's a question really of refining the way that we collect and collate data and how we use it. Because if there is a necessity to go back and say to the client, well, you've got this wrong, and they say, well, we won't ask the question, that's something that really needs addressing. It's even more important than having a remedy for when it happens. It shouldn't happen at all. Doesn't need to. Anyway, do you have another question? Hello?
Are you there, Catherine?
Apologies. Sorry about that. What would be the advice for making it... Tech problems as usual, yeah. What would be the advice for making it clear to customers that building works, unoccupied properties would need to be disclosed?
I've got an answer to that. I'd stick a large red label on the front of every policy. It's such an obscure issue that there needs to be a way of highlighting it. We can't perpetuate a situation where probably 95% of policyholders remain unaware of it. It's not good enough just to have it in the policy wording. It needs to be flagged up by both
Yeah.
insurer and broker or anybody else in the chain. It's that important. We need a large red label or some equivalent.
And referring back to one of your case studies earlier, it was asked, presumably, about the adjustment would have been on the declaration. Did the broker ask, or did the insurer waive the adjustment?
I'm not too sure what that relates to. Is this the
nor am I,
contractor's
no.
example?
No, what's he asking?
I think we'll ask him to provide a bit more information and perhaps come back to that one.
Yeah, didn't understand that.
So another question that's come in is, bear with me here. What are your thoughts on fair presentation of risk guarantee certain insurers use? Shall I read that again?
Yeah, say it again.
What are your thoughts on the fair presentation of risk guarantee certain insurers use?
Well, without seeing them, I don't know if I can give an opinion, so I'm not quite sure what it is that we're addressing.
It's not a standard feature, so it'd be very interesting, Roger, for us to have a look at one of those.
Yeah,
but,
if he wants to, whoever it is would like to send us one, we'll give you an opinion on it.
That'd be great.
It's a bit difficult to do that in the
So we have a question from David Wheeler, who said, I can't believe the insurer escaped liability on the general store. What was the outcome?
Shall we say we got it paid? I can't reveal it.
That sounds like a good answer.
But it was a good answer. We sorted it out.
Another question that's come in has said, how can an automated system be put on inquiry?
Well, that's for the techies to answer. I mean, I'm an old-fashioned insurance man, but it can't be that difficult, can it? Because if you have something called a chat box, which is pretty much ubiquitous, some kind of variation on that theme surely is possible. I mean, that's a big question, but I think it'd probably be worth a conference to actually answer that question, because that's what's needed.
Roger, I think
revolutionize.
This question relates to a highly automated system, and so how can we expect the insurer to come back? Well, the insurer is not going to use a chat box. So, but if the insurer doesn't grapple with this problem sufficiently, then they're going to be more open to challenge at the claim stage, where they allege there has been a lack of a fair presentation, where it can be clearly shown that the underwriter, whether it's a robot or a human being, has failed to come back and ask questions.
Yeah.
So I think it's open to all of us, whether we're insurers or whether we're brokers, to reduce the friction. So if what we're highlighting is that the lack of inquiry on the part of some underwriters, again, whether it be robot or human, if there is no inquiry, having received a fair presentation, then be it on their heads, because it will be challenged in the event that they seek to void the policy.
Yeah, and they are being challenged, and I have to say most of these things don't get to court. I should think less than 2% of the cases go to court, and the courts are trying to get rid of those as well, one way or another, because of the blockage that there is in the system. But believe me, there's a lot of robust dealing before it has to go to a trial, and there's not a lot of sympathy in the system for insurers that don't bother to ask important questions which they seek to rely upon later. That's best way of putting it. If it's an obscure question, that's a different matter, but basic ones are treated pretty harshly.
It's a fair point. We've got a request for a confirmation here. So in claims example 2, a chap called Philip has asked, as he understands it, the obligation to ensure a policy meets demands and needs of the customer, regardless of whether the sale is advised or non-advised. They are two separate elements of the sales process. Could you confirm that, please?
I'm not sure what he's saying. Mike, what do you reckon?
Well, the section that if you refer to ICOBs, it will be pretty clear that even a non-advised sale, looking at the role of the intermediary, they have a responsibility to explain the contract. Do they have a responsibility to and does it meet their needs? Now, of course, that responsibility would be revived at each renewal. It's not just at inception. Now, I dealt with the example 2, and for various reasons, the intermediary was never put under pressure on the matter. The insured had the option to seek legal advice as to whether or not their demands and needs had been satisfactorily addressed. Our view was that they had not been properly addressed, but it wasn't our role to instigate legal proceedings against the broker, and for one reason or another, the contractor never did. So it would have been an interesting test had the contractor pursued the matter.
Yeah.
Yep, so we've got another question. How would Flaxman's simply differentiate advised versus non-advised sales?
Well, Flaxman's wouldn't simply differentiate it because it's not for us to do. This is an FCA matter. And I just have to say, you've got to go back and look at how it is defined there and how it is interpreted. And if you've got a compliance officer, they'll be able to do that. But it's by no means a black and white situation. I can tell you that. It really is quite a complex. It's more complex than it needs to be. And there's a big overlap. So I'm not going to comment on that because it would take half an hour. But it is important to recognise that a lot of people think they're giving non-advised sales, but they're not, because there's enough in the process to say, well, that was advice, whether you said it or not. Actually, it was, in legal terms, advice. So it might be something worth getting an update, possibly through the CII on compliance aspect of how it works in practice, because this is a really difficult subject, and we come across a lot of cases where the broker has said, oh, but they didn't ask for advice and I didn't give it to them. And then you look at the paper trail, the audit trail, and say, well, what was that? Oh, that wasn't advice. Well, it was. And the point is, and I think this is a real point, most people, when they go to a broker of any kind, they don't make the distinction in their own mind as whether this broker is advising me or not. They don't make that decision. What they will say to us is, well, I went to a broker and he didn't tell me. Now, if the broker is saying, I'm not a broker and I'm not going to give you any advice on anything, so don't take it that I am, he's got to make that pretty clear. And if he doesn't, then they often don't, because if they did, they wouldn't get the business. This is a really tricky area, actually. So it's funny you should light on it today, but probably worthy of a separate subject.
I think making things clear has been a big, strong point of your answers to questions that have been answered.
Well, that is, because today. That's the ultimate test.
Yeah. Have we got time for one more question, do you think?
Yep.
Do you think insurers take a view that they would rather benefit from lower costs of automated processes versus the friction cost of disputes at claim stage?
Possibly. Some. I mean, some and some. I mean, I think that's a perfectly sensible question to ask. They may do. I mean, certainly I've heard from time to time people say, oh, yeah, well, we know we're going to get complaints, but we just price that into the cost of our services. rather than, and you know, that's a business model that some people will live with. When you look at that in the context of consumer duty now and treating customers fairly, it's a bit at odds with it. But the question is, what can you do about it? I don't think you're ever going to stamp out of anything bad practices. You know, life is going to always have bad practices in it somewhere, whether it's insurance or anything else you want to talk about. I think the point is, though, for those people that don't want to be part of bad practices and they want to actually have good practices and still make money, which is evidently possible because we've got, you know, a couple of 100 years of history of our own industry having done just that. If you want to do that, then I think you have to think about the things we're talking about today and say, well, interesting, how much notice do we want to take of these problems that evidently are occurring, and how much time and money do we want to put into it? I think that's a matter, it's a business judgment for individuals, and collectively for the industry. We go back to this thing of the integrity of the industry and the trust that the public put in it, because we all know that we want to be loved, liked, and get repeat business and respected for what we do. And I think we should, because a lot of what we do is brilliant and it's successful. But there's enough of it that isn't, that needs to be commented on, because if you don't, you're not going to improve. So, does that help?
Well, thank you very much. So we've run out of time, unfortunately. Always informative as usual, and thank you both for delivering the webcast today and all the information shared. The session will be available on demand, and please feel free to share the webcast with anyone that you think would benefit from it. Your CPD certificate and a copy of the slides is available to download from this portal. And a big thank you to all the delegates for joining us today. And so if you'd like to end with thanking the audience.
Yep. Thank you very much for attending, and look forward to seeing you the next time, which will probably be next year, Mike, won't it?
I think so. Thanks very much for coming along.
Thanks. Bye-bye.
Bye-bye.